Okay, so do you want to just do this?
Alright, welcome to the Galactic Society Week 2. Today's more of an interactive lesson, so we'll be logging on to computers shortly.
Yep.
Okay, also, no, you don't have to do that. We're going to use it. So first we'll have a look at the... We'll be having a look at the system review of last week. So this is the system we're all going to be eventually learning. This is what the performance is of last week. Okay, so we started February 20th, and we're now at 11% growth, just under 11%, with 0.7% daily, which should be about 1 million in like 2.5 years. So not too far away now.
Yeah,
we're getting there.
Wait, what's this growth on?
Equity.
Just the original investment 477 here.
Whose?
Mine. This is my live account. Live account, yeah.
So this is literally, so
Look, 0% growth.
it dipped a bit.
Slight dip, came back up.
Came back up, and now we're on.
Now we're
like
on track.
Like
On
11
deck.
or whatever it is.
Are you on deck?
I'm on
deck.
I just want to test out this tool. Okay.
Just draw over. It's fine.
Can you?
You've got the little
Alright.
thing. You've got the.
So yeah, so this is obviously quite a decent progress.
Right. So we're going to be starting with some technical analysis today. This is the most basic, like the most beginning thing you do when it comes to technical analysis. It's called support and resistance. So these are basically zones in the market where as I said, the volatility increases. So when price comes to it, it will either sort of bounce off it, reject the zone, or it will consolidate or perhaps break through. So a support is essentially where price approaches it from the top, and it will act as a support from upwards, a floor in a sense. And the resistance is when its price approaches it from the bottom, and it could just gap through.
It's like a floor and a roof, so so price will be bouncing between the floor and the roof, and if it's strong enough, it'll bust through. But either.
Yeah. And if either of these two are broken, they're still valid, but they act as the other thing. So if resistance is broken, it then acts as floor in a way for the next when price is above it. So. Yeah.
They also tend to act as magnets. So if price is approaching, say, support, then it will get sucked towards support. It will skirt.
It just skirts in, pretty much.
Yeah.
So.
Okay,
yeah.
So you might be wondering, why does this happen? So this is one of my favorite quotes of all time. The price chart then can be thought as a graphical representation of emotions such as fear, greed, optimism, and pessimism, and human behavior such as herd instinct. That's by Jean Folger.
Who's John Folger?
He's actually an economist. Basically, so all this means is that it's to do with human psychology, and that's about it. It's not actually. It doesn't actually.
These aren't actually physical barriers or anything like that of price. This is literally just zones created by people,
mass
bit
psychology.
Mass people thinking that this price is now cheap, I should buy, or this price is now, I can sell now, stuff like that. So
yeah.
Karan, can you move a little bit to the right? Cheers.
Okay.
Yeah.
All right. Okay. So to prove that it is mostly psychological based, this is the US dollar versus the Japanese yen. So this green line is the 100 area. So
this is 100.
So $1 is 100 yen. So as you can see, it's respected over and over again.
So as a support should, price will either reject it instantly or consolidate and reject it, and it hasn't yet broken through. So it's quite a strong. It's quite a strong support.
Yeah. Does that make sense?
This is also called the dragon, by the way.
The US dollar versus Japanese yen.
Yeah.
Code name's dragon. Okay.
Maybe it's the next slide.
This is the next slide. Okay. So this is a representation of what we'll have in our graphs shortly, our charts shortly. It's basically we're going to be drawing these out. So
is this weekly? What is this?
It's a file.
Okay.
So when we trade, so say because you don't want to trade on these zones. So when we're trading in between them, we'll then look out for, say we're taking targets, we wouldn't want the targets beyond this zone because obviously it might bounce up and then stop us out.
Yes, you wouldn't look to go short through support because obviously the chances are price will hit the support and just bounce back up, which is not what you want. So.
And again, going short is
Yeah.
selling the price and
Yeah.
buying it back lower.
Yeah.
Okay, so these don't actually have to always be exactly horizontal. They can be known as something called trend lines. So as you can see, price is slightly squeezing it, and then here, when it does actually break out, it makes quite a strong up move, which is for some people called breakout traders. This would be a good opportunity to buy.
Yeah.
All right.
So
now we're going to be drawing them. So everyone log onto the computer.
Trying them or throwing them?
should I get out my
Should I say
trading?
drawing?
Should I get my trading?